Welcome to Bears in Exile. Today is September 8th, and this is the market overview, looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXC, GLD, and SLV. Okay, well, we're a little bit later tonight, and that's because we wanted to watch the Obama speech and see what he had to say, and I'll go over that near the end of the video. Um, but for now, I will start off with the charts. And here we are with the Dow. We had the big green candle yesterday. We said that we were not impressed. The short-term moving averages essentially turning into a flat line. Today we had a decent move down after getting the initial jump up, which we were looking for. And, we ended the day, and the short-term moving averages, wouldn't you know it, are still a flat line. So I have of course, bearish bar full effect, and the previous wedge is still there that we've been playing with as it gaps above it and below it, and refuses to actually try to touch it. Well, this is a really interesting place to be, because if we go down tomorrow, we have the convergence of the two lines, which now at this moment should offer some support. So to go down to that convergence, 150 points or whatever, it shouldn't be broken, not as the points are converging, unless it's just a really strong move down. And on the opposite side, if we want to turn around and go up and run on some hope and change and $450 billion stimulus, we have the bearish bar to contend with. So really, kind of a little squash here, and it'll be interesting to see what happens on our secondaries. Slight uptick on CCI, downtick on the slow stochastic, uptick on the fast stochastic, uptick on the 14-day RSI moving average, uptick on the RSI itself, downtick on the histogram, and side tick on the MACD. Super mixed bag. And we talked about yesterday the faster time periods and their alignment for a bearish move. Let's see how those are faring. 180 minutes, it did get up high, it did start to roll over. Actually, everything is kind of rolling over on the 180. So if it wants to have more down movement, the 180 looks very feasible to doing so. 60 minutes, we were up high. It did roll over. We were hoping that it would kind of like hang around at the top, but it did roll over today. So stochastics on their way down, along with the histogram, along with the RSI, the MACD, etc. 30 minutes, we were up here, and it did let go, and it shot all the way to the bottom with the stochastics, RSI turning lower, MACD lower, histogram lower, room to move still to the downside in with the exception of the stochastics, which could stay down there for a little bit, but not too long. And then of course the 15 minutes, which we were way up here doing a little zigzag in the stochastic. It did not hold, went all the way to the bottom with our move today. So have we shot all of our bearish move? Well, 14-day RSI moving average still going down in the 15 minute, still going down in the 30 minute, going up in the 60 minute, going down in the 180 minute, and going up in the daily. So really it has become more of a mixed bag in the faster time frames, and so we're not going to get our complete domino like we were hoping for on Friday because of today's move, but still there are arguments for continued up and continued down, which according to this wedge, having convergence below and bar above, makes perfect sense. However, the market interprets Obama's speech is going to have a big impact in the morning, and that will be interesting. SPX, of course, more of the same. I won't rehash it twice, but we have essentially those levels to deal with as well. The VIX, we said yesterday that we're going into a flat line above the bar, and maybe it would hang out above the bar. The VIX was up today, and there's a little dragonfly doji looking thing, real muted because it's being covered up by the short-term moving averages, but you can see that the MACD has an uptick. The histogram for the MACD is a uptick, MACD a downtick, RSI, downtick, fast stochastic, uptick, slow stochastic, downtick, 14-day RSI, uptick on CCI. So it looks perfectly happy to hang out where it is for the moment, and that's fine. XOI, just like the Dow and the S&P, won't rehash it, but just kind of hanging out. On to TNA. Did have a decent move down today. It almost is a spinning top right in the middle between the major price consensus level and the upper price consensus level. Secondaries are very similar to Dow and the SPX. Downtick on the MACD histogram, uptick on the MACD, uptick on the CCI. I'm sorry, on the RSI, downtick on the CCI, downtick on the slow stochastic, uptick on the fast stochastic, uptick on the 14-day RSI moving average. Mixed bag. And we need another day. UUP. Cool. Big green candle outside of the upper Bollinger Band. Once again, we have no downtick. We do have wobble. Stochastic still very high. 14-day RSI moving average marching up along with the histogram and the MACD and CCR hanging out very high as well. So we do have a danger flag about this being so far outside of the upper Bollinger Band, but like I said, we have no downtick in the short-term moving averages. Notice the long-term bearish bar is collapsing, and at some point we will get a downtick, especially with such a rapid ascent, but it is not quite here yet. We could get it tomorrow as it repairs, gets back inside the upper Bollinger Band. But you know what? If it really wants to, bad news comes out in Euroland, this thing could keep pushing up the upper Bollinger Band, and that will be bad for the market, of course. FXE, nice inverse correlation. Down below the lower Bollinger Band, we do not have an uptick on the short-term moving averages. We do have wobble, and so we do have some warning signs, and we will be waiting for an uptick. And at some point we will get an uptick and a retest of the flatline long-term bar, which we would assume is going to have expansion over the next couple of days. And stochastic's very low. RSI 14-day RSI ticking down, along with the CCI, the RSI, the MACD histogram, and the MACD. And even though the stochastics are low, everything else still has room to move on the downside should it choose to do so. And GLD, our second VIX, nice big up move. We said that we weren't concerned about this until we have go down for a test of the bar. Everything is still pointing up. We can see that there is further movement with the middle Bollinger Band trying to get below the short-term moving averages. CCI up, slow stochastic up, fast stochastic down, 14-day RSI moving average down, uptick on the RSI, side tick on the MACD, uptick on the histogram. So like most things, kind of a mixed bag today, but still following the short-term moving averages, there isn't too much to worry about yet. And SLV, move up today, but red body, Secondary is very similar to gold. Uptick on the CCI, uptick on the slow stochastic, downtick on the fast stochastic, side tick on the 14-day RSI moving average, uptick on the RSI, and a side tick on the MACD, and a slight downtick on the histogram. Now for the interesting part, which is our NDE, which is Obama speaking. And so he wants to spend $450 billion, and which all sounded nice and dandy and happy and what a great idea, until he got to the part where it came to paying for it, which kind of kicking the can down the road, relying on others to pay for it in the form of the quote-unquote bipartisan committee. Very bad idea. And add to that his idea that the fair share, quote-unquote, needs to be paid by the corporations and the rich, and that's also a very poor idea. I also did not like his pass it now, pass it now, pass it now. It reminds me of the Obamacare pass the bill to read the bill type deal, and very, very poor. Do I think it's a good idea? I don't like that there's unemployment going to be extended for another year if it passes. Of course, I do like the idea of people, having some sort of a job for a little while. $450 billion is supposed to last a year of employing people and renovating schools and this and that and the other. But then you really got to think about, a month ago they extended the debt ceiling by $400 billion, and it lasted 3 weeks, and it's already gone, and we have nothing to show for it. So in that context, $450 billion supposedly lasting a year to do all of these infrastructure projects, when $400 billion for the national debt to extend us through the end of the year did not last 3 weeks. Does the math make sense? I would like to believe that it possibly could, but in retrospect and in historical context of recent events, absolutely not. So there you have it. Does it have a chance for passing? Well, Tea Partiers are not going to like the tax increase part. They're not going to like the debt increase part. Does it really have a chance for passing? I don't think that it really does. But we'll see, and we'll see how the market interprets it overnight and in the morning. We certainly are at essentially a spinning top for the market as a whole, and it can go either way at this moment. But certainly, we do not have great alignment for the bulls. We only have a mixed alignment for the bears, thanks to the movement today. And it's all going to be up to the market in the morning. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.